Yes, good morning. My name is Buck Stapleton. Now, help me welcome our guest speaker, Marilyn Sparks, Los Angeles County Insurance Commissioner.
Good morning. I have to first tell you that I'm not very comfortable with public speaking, so so thank you for indulging me. Um, I serve as a Los Angeles County Insurance Commissioner. It is a volunteer position. I don't get paid, so I'm not beholden, other than to the people of Los Angeles County. I was appointed by Supervisor Catherine Barger to help the residents and business owners in Los Angeles County to help navigate through insurance. I am an insurance agency owner, but today I'm here as commissioner. And so this crisis that we've been in started at the end of 2022 very quietly. But I wanted to give you some historical context. And first, I wanted to talk about um, fire danger. And starting in 2017, that's kind of when we started seeing more intense fires. We've California, across the nation, we've always had fires, but the intensity of those fires have definitely increased when we look at the amount of property damage and loss of life. And so insurance companies have to react to those losses. And we have insurance companies have actuaries that help determine what would be an appropriate amount of premium or rate in order to pay claims in case of disaster, like what we saw most recently at Eaton Canyon, the Eaton fires and the Palisades fires. Um, but then simultaneously with the intensity of the fires, we had COVID. And during COVID, there were some changes that were happening within the industry that are impacting us now. So one of the insurance companies, a large insurance carrier here in California during COVID said, gosh, during the stay-at-home order, we want to help our customers. This is one company, and they decided to credit their auto insurance customers. And I think the credit was 25%. Hey, we're all staying home, or we're all supposed to be staying home except for non-essential, or except for essential employees. We're going to credit our clients 25% for that one 6-month auto term. And the clients were thrilled. Well, the state insurance commissioner said, gosh, that's a great idea. And he compelled all the insurance companies to do that. Maybe not at 25%, but whatever the percentage was, I think it was 25%. And so as a consumer, we think that's great. But some insurance companies could not afford to do that. And so it put them in a very tough financial position. Then the state commissioner loved his idea so much, he wanted it done again. It was at a lower percentage, but still, it could and did impact many insurance companies. So then he says, during COVID, I'm not going to approve any rate increases. Now, when an insurance company applies for a rate increase, it's a process. It's not, here's my application and they stamp it and approve it. It goes through an evaluation process, and that process could take 18 months to 2 years. So they're looking at a forecast. So if I put in an application for a rate increase today, that may not happen until 2027, end of 2026, if it's approved. So there's a very slow tail to that. And so the insurance companies are putting in their adjustments or their rate increases, but he says, I'm not going to approve any. during this shutdown, if you will, or the stay-at-home order. So when he says no today, that's no for 2 years from now. So again, that puts the insurance companies in a difficult position um, to be able to pay claims because that's what everyone's buying insurance for. In case something happens, there's coverage there. So the end of 2022, we see one insurance company. You recognize this logo. They quietly left California. And then other companies started following in 2023. The Los Angeles County Insurance Commission held a forum, and we invited the California Department of Insurance, California Fair Plan, a representative from Citrus Valley Association of Realtors, California Building Association, and even consumer watchdog, Harvey Rosenfeld, and trying to figure out, we know there's a problem, but how can we come together to resolve this for the consumers of Los Angeles County and then hopefully the state, right? Los Angeles County is one of the, it's not the largest county, but it's the most populous. So we feel like we have some influence within the state. And so there's some back and forth, and people are talking about how um, not being able to get insurance is preventing people from buying homes because there's not a lot of options out there. And I'm sure as if you're a buyer's agent, you see that happening. People are trying to figure out, can I get insurance and where can I get insurance? So the California Department of Insurance says we don't want insurance companies to leave the state. And we don't want that either because then that limits availability, it limits choice. And then what happens? There's a supply and demand, and pricing can go up. So we wanted to protect consumers. But Consumer Watchdog says, call their bluff, let them leave, which was shocking to us. Like, why would you say that? But he did. And consequently, we see companies that are still not offering new policies in the state of California. And we thought 2025, we were all going to breathe this collective sigh of relief, thinking, okay, the worst is over. Insurance companies are going to start coming back. But then January 7th happened and they said, no, thank you. Maybe 2027, maybe the end of 2026. So the challenges remain. Right now, our office is focused on helping the people that have suffered loss during Eaton and Palisades fire. I had the privilege of working the mobile claims center for Altadena the Saturday after the fires. And I can tell you that the people that came up to our mobile center are lost. The devastation is real. And to see people have lived in their home for 50, 60 years, and all they have is a reusable shopping bag. That's all of their life has been down to one bag. So helping them navigate this process is not easy. And rebuilding sometimes doesn't mean rebuilding where you are. Maybe rebuilding for them is in a different location. And so our office is helping people navigate through that. And you can see there are people are upset that insurance companies aren't paying out their claim limits and things like that. And so there are legislative recommendations to help streamline that. But insurance companies are a business just like yours. Every insurance company has their cost of doing business, and they have to charge the price to do that, to be able to stay here in California. I'm a free capital kind of girl. I feel the more insurance companies we have offering a good value is better for the consumer. Choice is always, to me, the best way to go. So I just wanted to give you some historical context on what's happening, but I wanted to leave most of the time to questions because this is not an easy topic. And if you're, being in the real estate, this is a integral part of closing the transactions is insurance. So I'm happy to take questions, and let's just let the conversation lead where it goes. Anyone have any questions, concerns?
Good morning. Yeah, thanks for helping us out with this. What would be, say, your top requested services when someone asks you for help with?
It's usually, I've been trying to get hold of my agent, but they're not calling me back. And they're overwhelmed because either they're trying to answer, why did my rate go up? Why are my premiums so high? Um, I need to buy a house, but you're not writing insurance. Where can I go? And so those are the top questions. The other big tip that I would give, especially for listing agents, if there's any improvements done to the home, like um, plumbing replacement, new roofs, anything like that, have the paperwork ready, because when a buyer goes to get insurance, they're going to ask, has the plumbing been replaced within the last 20 years? What's the age of the roof? And you could say, yeah, the roof's 5 years old, but it doesn't matter what you say or what you have. It's what can we prove in insurance? So documentation is key. If your seller is looking to sell, have them get all of that paperwork ready for the buyer. It will make the transaction so much more smooth. If you're a buyer's agent, I recommend when your client gets that packet from escrow, don't leave insurance last. I know it's not the best, or it's not the funnest thing when we're buying a house. We're looking at, where are we going to put the Christmas tree, and where are we going to have parties and get-togethers? But insurance, don't save it for last, because there could be underwriting issues that have to be overcome, and those things take time. So we don't want to be the ones holding up your transaction. We want to help you in that process.
Hi, Marilyn. Sylvia Ramos here. Good
Hi.
morning. Sorry, my voice came out really strong. Wake up, everyone. Okay, so the main focus, usually folks always concentrate on what is covered.
Mm-hmm.
But the surprises and the shocking surprises are in the gaps and the loopholes of what's not covered. You as a human being, not as an agent,
Mhm.
what keeps you up at night on not being covered on certain gaps that we're not aware of?
Usually those gaps are what they call sublimits. So, for example, traditional homeowners insurance will cover the cost to rebuild, separate structures, loss of use, and personal property. Let's say your personal property policy, you have 300,000 in coverage, but that doesn't mean everything is going to be covered. So if you have 300,000 in personal property, but you were out for dinner and somebody broke into your home and took your jewelry, you're not going to get 300,000, even though maybe you had $100,000 worth of jewelry in there. There are special sublimits, and that's usually when people realize, I didn't understand my policy. So on average, like a wedding ring under a homeowner's policy, you might end up with only $1,500. which could work. I have my grandmother's wedding ring. It's nothing spectacular. It probably is worth $100, but the sentiment is everything. But insurance doesn't cover sentiment. So look at your sublimits and make sure that you have enough. Prop 103 says it's on the consumer to pick coverage, but most consumers don't even know what this contract means. And that's what insurance is. It is a contract. And so we always recommend contact your agent or broker for a review. When was the last time you had your insurance policy reviewed? It's probably been over a year. But the cost to rebuild has gone up. The cost of lumber, the cost of labor. There's a supply and demand effect right now happening because of Palisades and Eaton. So have your policies reviewed to make sure you have adequate coverage. A
Thank you
follow-up?
for, yes, thank you. And a follow-up, is an umbrella policy still a thing?
Absolutely. Absolutely. Umbrella policies are so great because they offer large coverage for a low dollar amount. So if you have cars, primary residence, if you have rental properties, anything in your name, an umbrella policy extends liability from your home and automobiles. And average cost for $1 million of coverage can range about $500 to $600 a year if you have a good driving record. So you'd be crazy not to have an umbrella. If you're a homeowner and you get into an at-fault auto accident, you have so much at risk, all the equity in your home, cash on hand, savings accounts, some retirement, even cash value in life insurance, as well as garnishment of future earnings of up to 25% until the debt is paid. So getting an umbrella policy is really an inexpensive way to protect your assets. You're welcome. Yes, sir.
Hello, I have a question. As we understand, all homeowners, all business owners in California are required to have insurance. Well, at least fire insurance. Are there different fire prevention or water prevention tools, risk mitigating tools that we can use to kind of help reduce our premiums, maybe?
Yes.
Or
So
maybe a list or something?
yes. So let me go. Your original question was homeowners and business owners. So business liability is not required. You'd be
Mm.
crazy not to have it. But the only policies that are required by law is auto insurance and workers' comp. Everything else we get because a lender tells us we have to have it or a landlord tells us we have to have it. But so I just want that's just kind of people think everything's required.
Oh, no, that's good. That's good.
But
Good
there
info.
are home hardening steps that you can take to protect your home and possibly get a discount from your insurance company. And so it could be clearing away an area 5 feet away from the structure of your home. So if this is the box that is your house, 5 feet out, that zones can help reduce fire. We saw, like in the Eaton fire, it was surprising how far the fire traveled, and that was because of embers. The wind carries the embers, and without strong winds, embers can travel for a mile. So boxing in your eaves is a good way because embers go underneath and they get trapped in there and they smolder, and then that starts fires. So newer construction requires interior sprinklers. There's a company that has it draws water from your swimming pool, and you can pump water to water down your house if you're in or near a fire. So there's many things you can do. Mostly it's getting rid of all of the combustibles. A lot of people they store debris outside or they have appliances outside, and we just have so much stuff, we don't know where to put it. And so we start leaning it against the house. And those are all traps for embers or someone just leaving a rag that they had cleaning solvent on and they left it outside, and that can ignite. So we have to be really careful of how we dispose of hazardous materials. I mean, simple cleaning solutions are hazardous waste, so we have to be careful with that.
I have a follow-up question. Thank you.
Mhm.
We have a follow-up question. Is there like a list or something online where we could see some of those items that we could home hardening?
Yeah, so CAL FIRE just put out their list of the new fire maps, and there are some home hardening tips on there. I've got some of the LA County Emergency Survival Guide. There are tips in here. I don't know where those books went, but I brought a couple dozen here for you to take. The and it kind of leads me to another topic on the CAL FIRE maps. They have a map, and you've even seen the NHD reports that say high fire or high flood area. Those are great, but insurance companies have their own. So CAL FIRE may say this is a high fire area, but the insurance company may say, no, we're happy to take that policy, or the reverse. So the insurance company that's going to write the contract, they have ultimate to say whether or not they're willing to take on that risk.
I do have a question.
Yes, sir.
A customer asked me, told me that she tried to get a quote for homeowner insurance,
Mhm.
and her insurance company required her to take some fire preventive measures
Mhm.
to the property before they can give them a quote.
Mhm.
Is that universal, or is that just only for that company?
It sounds like it's just the company, because if they're buying the property, no.
That's try to continue.
Oh, continue coverage. Yes, absolutely. Every company has their own underwriting rules. And if they say that tree's too close to the roof, or there's moss growing on the roof, you can't have more than 10%. That has to be professionally cleaned. Missing shingles, lifting shingles, all of those things. An insurance company can say, this is not an acceptable property.
But it's a little bit contradictory, because the customer had a tree
Mhm.
and the insurance company asked her to remove the tree, but the city wouldn't let her.
Yeah, it could be this external struggle, especially when we have protected trees here in California. And so sometimes it means you have to go to another insurance company. Thank you.
How often are those books revised?
Well, it depends on what's going on. This version is, I think, 7 years old, but it covers so much because it's not just fire. It's earthquake. You can use it in your business. It's flood. It talks about pets, because that's the other thing we forget about sometimes, is an emergency setup for pets. These are available in many languages. You can just contact me. They'll have my information up, but many languages, and we can get these out to you. And they're also available in a soft version as well. Although I like the paper, because what if we're out of power or don't have internet access? The paper one is good. And have a meeting with your family or your loved ones and let them know, in case of emergency, this is what we're going to do. We have a plan. Any other questions? Yes, sir.
Hold on one second. Outside. Hold on. Thank you for coming this
Thank
morning.
you.
What's the risks of using out-of-state insurance?
What's the risk of using out-of-state insurance? So there's two types of insurance: admitted and non-admitted. A non-admitted carrier means that they can do business in California. They just do not participate in the Guarantee Association. The Guarantee Association is a fund that admitted carriers participate in. That way, in case an insurance company is insolvent and can't pay claims, the Guarantee Association steps in to help settle the claims. So probably the most well-known non-admitted carrier is Lloyd's of London. Everybody's heard of them. They've been around for over a century. The thing to look at, what I do with my clients, if I'm trying to figure out what's the best route to go and a non-admitted carrier or a surplus line is the only option, I look at the credit rating. The credit rating tells us, and you can Google it, what's the credit rating for Lloyd's of London or any other company? And it will give you a letter grade like in school. And so A+ is superior. That means they have the greatest chance to pay claims. And then it goes on down. There was a company last year, they were an admitted company, but their credit rating was a C. And mortgage companies were telling their borrowers, you have to get different insurance. We will no longer accept this company. So we were getting calls in trying to find out where can they go. They've since raised their credit rating, and so that's been an improvement. But the risk is in case of insolvency, but then we look at the credit rating. And then we monitor that. If I have a client that I put with a non-admitted carrier this year, it doesn't mean I'm going to stick with that company next year. So you want your always have a conversation with your agent or broker. If they're not willing to take the time to speak with you or your clients, find another agent. This is not, oh, I got my home policy and I'm just going to put it in the file and never look at it again. No, this contract is a living document and needs attention. You have to take care of it so that it will take care of you. One more or no? That's it? Okay. Thank you so much.
Okay, let's give her another round of applause and very informative, and take notes, please. Thank you for joining us today. The meeting is now adjourned.